That's the way we started. The market was very oversold. Of course, Friday, you made a new low for this kind of correction phase we've been in since October. I do want to note this rally, about 1.5% or so in the S&P 500, brought us to within ticks, like decimal places, of year-to-date flat on the year. So for the S&P 500, it started December 31st of last year, 2673.61. Here we are, 2673.49. We've crisscrossed this a while. So here we have 4 to 5 weeks to decide if this is going to be an up or down year in the S&P. And I do think that the action today gave you a little hope. You put it in the win column. You say you have to go back out and play tomorrow. But when we did make that new low on Friday, it was a little bit less intense. You had fewer stocks making new lows. And I think a lot of the technical stuff says, OK, this is a plausible place where we can have a little more than just a one-day pop of a rally, simply because you got traction in oil, global stability, at least whispers of it overseas. And then you had a good Black Friday. So all of a sudden, it takes the attention away from how slow will 2019 be for the economy.
David, clearly oversold was a factor. Mike also mentioned that sort of whispers of improving financial stability overseas. Do you think that performance, particularly Europe, allowed the markets to start positively today here in the US?
Well, I think people are looking for good things now. I think we spent, the last 2 months looking at all the bad stuff that was happening around the world. Now today we decide to look at some of the good stuff. So that's what happens. The markets get oversold. They come back. I don't think this is the beginning of any big uptrend or any big downtrend. I think we're stuck here until we resolve what the Fed's going to do, what the yield curve's going to do, what trade's going to do, what Brexit's going to do. There's a lot of things floating around, and we just got to wait it out. Remember, corrections come in price sometimes, and they come in time. And I think this is a time correction and not a price correction.
Mike, what should we make of the weakness we've seen in Apple? I think it started the day higher, and then it turned lower with the Supreme Court hearing. And
it has underperformed. It's really been this kind of place that people have a lot of profits sitting there still, though not as much as they had. And it's basically been, it was one of the last hiding places, I think, for growth stocks as the rest of the market gave way. And then that is now buckled. So I do think that there's a rethink of exactly what we can expect in terms of fundamental growth out of Apple, but also it's just been a source of funds. It's a cliche on Wall Street, but basically people looking to lock in a year or try to mitigate the damage, they've been selling it. And I think it's been a very kind of noisy fundamental situation with the China exposure and all the rest of it. So I don't think it's something that happens at the leading end of a down phase in the markets. I think that when these stocks have kind of hung in there for a long time and they finally break, that shows you that the correction's been going on a while. Now we have other stocks that are in a similar category, and only a few of them, Microsoft being one of them, that still has not given way.
Let's talk about financial stocks, which led the rally today, or close to leading the rally. They were towards the top of the sector performance. It was up 2%. Goldman Sachs was one of the best performers on the Dow today and had its best day since October. Whether, Mike, we're talking about Goldman Sachs itself or the broader banks index, they had a bounce off some poor performance of late. KBW Banks index year to date is down some 6%. No real factors behind this other than the oversold factor.
Not much at all, except that maybe an inkling that Treasury yields have kind of found a near-term floor. You get a little bit of a bounce there. And also, if it's an oversold rally, this is one of the more oversold areas, particularly Goldman. The last time you did see a 2% plus one-day pop in the banks index, David could speak to this more than I could, was in July, when it did actually lead to a pretty good rally over the next couple of weeks. So there's some significance to the magnitude of the outperformance of the banks today, potentially.
David, your thoughts on this? Are financials a buy right now?
Well, I think we had a pretty good weekend shopping session there, Black Friday and so on and so forth. So I think that kind of tells people that the economy is not falling apart, which was sort of the assumption in a broad sense 2 weeks ago or last weekend. So I think that's helped, certainly, the American Express, Visa, MasterCard, and I think the banks are ready to kind of rally on the fact that the economy isn't as bad as people were thinking 2 weeks ago or last week. And so I think the Black Friday sort of told people that the economy is probably better than they thought.
Let's talk more broadly about equities. It has been a rough year. Emerging market stocks, and a new note from Morgan Stanley says that will change in 2019. In fact, the firm downgraded US equities to underweight, predicting EM will outperform. The analyst who made that call was on Worldwide Exchange earlier this morning.
a slower economic backdrop, weaker earnings growth. You couple that with continued tightening in the first half of next year from the Fed. And I think it's all a cocktail for a much more difficult outlook for U.S. equities relative to the rest of the world.
Mike, interesting this particular take, because it does outline some factors that could make you less positive on the US than you were a year ago, but it also are factors that apply to most of the rest of the developed world. So it's almost a bearish call for all developed market equities, where there's slowing growth,
developed
there's tightening.
Emerging, exactly, yeah. It is interesting, the idea that potentially there has been such outperformance in the U.S., which probably has helped the dollar this year. Maybe you see a little bit of a receding of those factors in 2019. It's a reverse of what we thought, I think a lot of people thought last year, right? Coming into 2018, people thought overseas is the place to be, emerging markets even better than developed overseas, and it's been, obviously, the reverse is how we've played out. So I don't think this is consensus yet to say that we should go overseas. In fact, I think the consensus is the U.S. is still the quality place. It's more expensive, but you're paying up for more stability and quality.
David, given the comments you just made about the U.S. economy, where do you stand on this call from Morgan Stanley? Do you disagree with it?
Well, I wish they would have told me 3 months ago to sell the U.S., but I didn't get that call. I think my sense is that, you know, what they're saying is basically the rise in rates is hurt, but if the Fed keeps rising rates, it's going to hurt the rest of the world more than it's us. We have the reserve currency, we have the better economy. So I still think, as Mike said, I think we're still in the sweet spot here. This economy is still the best economy relative. And I think if you think the economy is going to stay strong, you have to stay in the U.S. I don't think this rotation really adds any value to the average investor out there to say, oh, my God, I'm going to sell U.S. and buy Europe. They don't know what that means. You know, buy what you own, and I think that's the best way to play it.
David, in light of that, given the fact that we have some very notable Fed speak this week, it sounds like you think the Fed is going to stay the course, at least for now, depending on the data going into 2019 in terms of rate hikes. Is that the case?
Well, this past weekend would tell me that the economy's pretty good, so I think the Fed will hopefully stay on that track. I think it's the best thing long term. I just personally don't like the fact that these guys do way too much talking, and so the data points get parsed, and we spend all week wordsmithing somebody's speech. And now that we're going to have what? We're going to have a press conference after every meeting now, which is going to be covered by all the networks. And it's crazy. They talk way too much. I wish they'd just do their work, raise rates, and then go away and shut up. But that's probably not going to happen.